Guess what? Stephen Carroll's here. He's trying to get in early. Starting with a landmark fluorescent deal over Greece's debts, agreed in the early hours of this morning.
Certainly was. After years of pressure from the IMF, Eurozone countries have agreed to relieve some of the burden of Greece's massive debts. The International Monetary Fund had repeatedly warned that the country's debts were unsustainable and threatened to pull out of the country's third bailout package if debt relief wasn't included. Eurozone finance ministers also agreed to pay the next 10.3 billion euros in bailout money to Greece after Athens passed a package of tax rises and other reforms over the weekend. Nicholas Rushworth reports.
A breakthrough deal from Brussels with more cash on the table for Greece in recognition of its efforts to adopt reforms. Also agreed a roadmap for long-term debt relief to ease Greece's mountain of debt. Brussels says mutual trust is returning.
I think it's an important moment in the long Greek programme, an important moment for all of us. Since last summer, where we had a major crisis of confidence between us.
The deal gives Athens 10.3 billion euros in new loans and okays further debt relief in 2018, outlining criteria for that, such as that the cost for Greece for repaying its debts will not exceed 20% of GDP. The deal has cheered the IMF, which is signalling it will come back on board in talks towards helping Greece as it reels under debt, currently almost at 180% of GDP.
We welcome that it's now recognized by all stakeholders that Greek debt is unsustainable. We also welcome that there has been agreement on the methodology for how to assess debt sustainability.
The breakthrough in Brussels follows new budget cuts and tax rises in Athens over the weekend. This is an agreement in principle, short on detail. One vital aspect is that a vote on long-term debt relief for Greece in the Bundestag is delayed till after Germany's general elections in September next year.
Going to turn to China next. The value of its currency, the yuan.
Yes, the Chinese central bank has allowed the yuan to drop to its lowest value in 5 years against the dollar. That could create tensions with some of its trading partners, as the dollar and the Japanese yen have both been strengthening in recent weeks. Now, a weaker yuan makes Chinese exports cheaper abroad. People's Bank of China weakened the official rate that it allows the yuan to trade in against the dollar by 1/3 of 1%.
Stock markets then, Stephen, what's happening?
We're starting here in Europe, shares opening up, markets picking up a positive lead that we got from Wall Street overnight. Some real cheer too on the back of that Greek debt relief deal. Mining firms leading the gains in Europe, but here in France, shares in Peugeot Citroën up by 1% after reports the government could be considering selling its stake in the car maker. Over in Asia, we had generally gains as well. That depreciation of the yuan did send Shanghai into the red towards the end of trading there. The star performer was the Hang Seng in Hong Kong, which is up by over 2.5%. Some more of today's business headlines for you next. Toyota and Volkswagen have announced major investments in the ride-sharing industry. Toyota will be working with Uber on a partnership that allows drivers to lease cars from the Japanese firm and cover the payments using their fares. Volkswagen, meanwhile, is putting $300 million into Uber's rival, Get. The chemicals and food giant Monsanto has rejected a $62 billion takeover bid from Germany's Bayer. The American firm said the offer undervalued the company but left the door open to a higher offer. The merger of Monsanto and Bayer would create the world's biggest agricultural supplier. And the boss of British retailer Marks & Spencer has warned that conditions remain challenging for the company in the year ahead. Pre-tax profits fell by over 18% in the year to the beginning of April. The new chief executive, Steve Rowe, has promised to overhaul M&S's clothing lines, which had been among the worst performing parts of the business in recent years. Shares in the company opening down nearly 7% in London.
Now, finally from Stephen, pizza lovers may soon be able to order their meals from a robot, apparently.
Yes, this is thanks to the payments firm MasterCard, which is going to introduce Pepper, the humanoid robot, as a cashier in certain Pizza Hut outlets. Now, the company says it'll allow a customer to order and pay for its food with Pepper in a few outlets in Asia. We don't know where yet. The robot, made, of course, by the Japanese firm SoftBank, is already being used in other businesses including Nestle. Pepper has been programmed to chat with customers and to answer their questions. MasterCard says that it's a genuine attempt to see how payments will be processed in the future, but they have assured that jobs will remain in pizza takeaways. So for everyone's first job when they worked selling pizza, those jobs are safe for now anyway.
Yeah. Why is he so short? That's what I want to know. He's down here somewhere.
It's
Pepper.
cultural.
Okay. No, but he was talking to people who were much taller than him, so he must be...
It's childlike. You're supposed to, be more receptive to a smaller robot.
Okay. I'd rather talk to Salt, I think. Thank you very much. Steve with the business.